We were saying, TCS will definitely be in focus, reported a good set of Q1 earnings. HCL Tech will be reporting their earnings today. So to discuss in detail how Q1 will pan out for the sector, Omkar Tanksale, the senior research analyst at Axis Securities, joins us now. Omkar, thanks a lot for joining in. Good morning. Good numbers coming in from TCS. The management also saying they're maintaining that FY25 will be better than FY24. But your sense on which way the stock could head now, and have you changed your earnings estimates? Because although the numbers are not bad, the deal wins are on the subdued side. So how would you read into that?
See, I believe it's more of, the deal ramp up and increased client engagement rather than deal wins, because they have already have ample of deals on their or the deal pipeline is still very resilient that on their balance sheet. But I believe more of, increased client engagement. And now for this quarter, around 1% growth has came from India business. So that is the kind of things. But I believe it's more of, increasing client engagement that one should be considered it. And the management are also highlighted that if the outlook hasn't changed a bit for at the end, likely to remain for a couple of quarters, but they have seen some green shoots in BFSI verticals, in small pockets and manufacturing and the healthcare part. Yes, telecom will likely to be subdued, but likely to compensate on with the other verticals as well. So I believe it's more of, on a longer run horizon, the demand scenario is smallly picking up. Now the US elections are still there, so uncertainty will likely to remain for in some parts. But I believe it's more of a resilience and changing up and shaping up of the demand going ahead.
Hi Omkar, good morning and good to see you. Ben, TCS used to trade at a valuation premium in comparison to its peer group. And that's narrowed quite a bit. I think now you have Infosys, HCL Tech as well. They've narrowed it quite considerably. Given that in terms of return ratios and probably growth, TCS could still be an outperformer. Do you think it should get back its premium in comparison to its peers?
I mean, definitely, if there will be, the TCS has always been an execution masters, and TCS as grows in the volume, they are giving the strong margin profile, strong return on equities, which will be very lucrative to their investors, and they are also a dividend paying company. So they are ticking up all the criteria that for the investment horizon. So if I would like to specify in a valuation terms, the TCS will likely to gain, as we can going up on near to the recovery side, and in terms of demand I'm saying, and we can see some premiumization of in terms of valuation going ahead, but not at this moment of time when there is a huge uncertainty. I mean, there is an uncertainty is going around. So, but I believe definitely TCS will catch up a bit going ahead.
Okay, Omkar, word on HCL Tech as well, which is reporting. We're all looking at the revenue declining. The company also kind of guided for it, right? It gave a clue to this, saying that there is, I think, offshoring in a large deal, and because of that, it's going to be volatile in the quarter. In the BFSI vertical, yeah. But even if we look past that, I mean, what is HCL Tech's trajectory? And from an investor perspective, are you just better off with the leaders, TCS and Infosys? Where does HCL Tech stand in your pecking order?
Yeah, I mean, definitely TCS as HCL Tech is having the better comparison. I mean, the better business metrics as compared to the other verticals, which reduce the dependency. If you have seen in the past 1 year, it's year-end business have grown up as compared to the other services, and also hello, I'm audible?
Yeah, we can hear you, Omkar.
Yeah, and also on the product and platform business has demonstrated strong growth when in the Q3, especially when the other companies are reporting sluggish growth because of the furloughs. So it's a better balance, to be very honest with you, and as compared to the traditional. In case of where telecom, BFSI, and high tech verticals are tampered down, they are have the manufacturing exposure with R&D. In these verticals, the investments are happening, and from the large enterprises, the automobile OEMs are investing in auto transformational deals, apart from the cost optimization deals that the traditional IT services is being looking for. So we are more positive on HCL Tech. We are expecting the HCL Tech to retain the guidance of 3 to 5%, maybe, which will likely to outperform in their large cap Indian peers.
Okay, so you're still positive on HCL Tech. Fine. Just before we let you go, in the mid-cap IT space, what are your topics?
We are still positive, on ER&D space, and KPIT and Persistent are the two companies that we are looking for. Despite of having premium valuations, we believe that they are performing robust and consistent growth over the period of time, and KPIT is being still given the guidance of 18 to 22% with a volume, with a margin growth of margin expansion of 20.5 they have guided for, and around 100 basis point of margin expansion that they are expecting during the financial year FY25. So we are bullish on KPIT, and also Persistent. Persistent also demonstrating well in terms of revenue and the margin expansion. Yes.
Okay, thanks a lot for that. Well, those are, the views on the sector as well as how to approach TCS. Revenues and margins beat estimates. A lot of brokerages actually have raised their target price. UBS has raised its target price on TCS to 4,600 rupees. So that's a big upside to the current market price.